Hello guys, this is fairbinaryoptions.com. So let's write on the screen so that we know where are we here. So www.fairbinaryoptions.com. And for this Saturday, as you can see, the 12th of July, I would like to discuss a bit the Great Britain pound US dollar on the 1 hour chart, and if you want bigger time frames, because this one looks quite bullish from my point of view. I mean, we had all this adversity and all this US dollar bullish news, but the pair, it is just refusing to break to the downside. I would say that we have a triangular formation. If you zoom out a bit, I would say that the move to the upside that ended all the way here or here is nothing but an X wave, and this X wave is part of a double three running or a bigger corrective or complex corrective or correction on a bigger degree, and I would say that this is just an X wave. Now, there is only one problem with the move that ends with this X wave. Usually, for the pattern to be bullish, it needs to be it needs to end in a contracting triangle here or with a contracting triangle. But a contracting triangle, as you very well know, has 5 different legs, and each and every leg normally should be smaller than the previous one. However, there are variations of triangles, and it depends very much on the baseline that the triangle has, either with the A and C baseline, or the B and D, which is the most common, or the C and E, which is least common, but nevertheless on the currency market it is quite frequent. I would say we have 2 different scenarios. The first scenario would be that the X wave ended here, and the second scenario would be that the X wave actually went here. So this one I will make with a different color. So let's say that this is an X wave. Let's make it of a blue. Now, from this moment of time in red, it is very much possible that the market forms the following situation from here. So from here to have wave A to the downside here, or all the way here, wave A to the downside here. Like this. Then a B wave to the upside, so A and the B wave here, and the C wave to go to the downside here. The D wave and the E wave to be done around here or here. This was after hours, so I don't know, not, let's say here, and this would be, let's make this one here, this would be the first red triangle, if you want, the first scenario for the triangle. However, it might be very much possible that the triangle actually to be this X wave, and then it means that it is not completed. So it might be that this is wave A to the downside. Let's make it of a blue line here. So this to be wave A to the downside, then the B wave here, then the C wave to be done here or here, it doesn't matter, the C wave, then to have a D and E, and then the market to break high. In both cases, let's make this one blue. In both cases, it is obvious that the triangle is contracting, and in the red scenario, either we will have the classical B to D trend line to be this one from here, so from here to here, this to be the B to D trend line, and we should wait for it to be broken before going and buy call options. Like this. Or in the blue case, in the blue scenario, we will have a possible B to D trend line to start from this moment of time and going all the way to the downside, something like here on the D wave. But nevertheless, when it is broken, we would like to go and buy call options again. What I'm trying to say is that this area here between the 2 axes is a pivotal area, and if and when the market is going to break it, so this area here is the area that we are interested in between the 2 axes, and by the time this one goes, basically the recent highs go, then we should go and buy call options with as much of an expiration date as possible, even though this is a 1 hour chart. I would go and buy with 1 week expiration date. From a fundamental point of view, we have a lot of events next week, including Bank of England's Governor Carney speaking. We have also Ms. Yellen testifying in the United States in front of the Senate and the Economic Joint Committee. We have also the ECB Draghi speaking, and the euro Great pound flows are also influencing the pair. Nevertheless, all in all, we want to buy call options. We want to buy call options with 1 week expiration date or end of week expiration date when the 71.80 area is broken here to the upside, as it means the triangular formation is done, and then we should go at least for the thrust of the triangle. But keep in mind that this X wave, when the triangle that follows up to this X wave, is part of a double tree running being called, and on a bigger degree, and we should advance even more. Next week will turn out most likely to be a pivotal week for the US dollar, as the market seems to consolidate quite aggressively lately. Thank you very much for being here. This is fairbinaryoptions.com. Let's write on the screen that we are looking to buy call options when 171.80 is broken, end of week expiration date. Thank you again, and bye-bye.